This name, Charles Moon, stock strategist, Prosper Trading Academy, joins me with an example trade. I mean, what a stock chart this has been in 2025. Now what? What's your example trade?
Well, I really like how they defended Friday's lows, which is obviously the day that sparked a big sell-off broadly in the market. So, if they're able to maintain basically above this 305 price, I love the call vertical spread right now for the August 22nd contract. It's going to be the 335, 325 strikes. We're going to sell the 335, buy the 325 for about a debit of around 350. The stop should be at around 50%. So if you get a 50% haircut, I would say it's not a good time to be in coin, but as long as it's maintaining, the upside is tremendous. There's one technical resistance level that I do have some concern. It's right around 325, 326. But if we could power up through this level, there's an incredible upside gap without much obstruction. This is a stock that could rally all the way up to 360 by the end of this week. It's hard to ever deny a stock when it has this retail demand pushing beyond it. We hear these analysts downgrades, but respectfully, for me, it always comes to retail interest. This is something that we're going to see in a stock like Reddit, which is now extremely explosive. And so, for me, I think this is going to be something that retail traders like as value. And if we can clear that technical resistance at 326, I think it's going to make a pretty sharp jump over the next week or two.
All right, so there is opportunity. Stay nimble, as our friend Art Cashin used to say here on the floor. What are your thoughts, big picture, on the market? I mean, today's market action after a big sell-off on Friday on the heels of the jobs report, which was terrible. Today, stocks are really bouncing back. In fact, it's the best day since June. What do you think?
Yeah, what I like to use is short-term moving averages because that gives me a little gauge on health. When stocks tend to perform or outperform these moving averages or utilize them as support, usually means that the trend is really strong and really healthy. Well, we saw Thursday that we made the all-time highs and just sank to the lows. And for whatever reason, the markets was pretty heavy overall last week. But Thursday kind of sparked that really aggressive pullback. Friday, we gapped down, we dropped, we tried to rally, we pull back again. We finished down quite a bit. So, usually this is the type of response that we'll see from the disappointment of either news or the broad market selling. Now, the question is, can we recover fully? It's hard to say that this market can, especially now with September Fed rate cuts being jumped from, I think it was like 34% to almost 83%. And it looks like it's as if the market is not only pricing in the potential of September being the initial rate cut, but the possibility of actually having three being in the window. And, we've already priced in the idea of having two, obviously based on the Fed dot plot, but there's always some optimism for the third rate cut. Well, that can't happen unless we actually have that cut in September. So, I expect a lot of volatility right now over the next week or two. This volatility is generally never great for the markets, especially trading at all-time highs. We're going to have to wait and see. I'm looking at a really key level right around 564 for the Qs. If we could get above that level, we're probably going to get back to, doing normal business, slowly grinding up. But if we can't get above this key threshold, we may actually be marked for a little bit more downside in the near term.
All right, Charles Moon, great to see you, stock strategist at Prosper Trading Academy. Thank you so very much. A good look at the markets as well as Coinbase there.